Okay. Because y'all know I forgot to record, right? But luckily I wasn't going over anything that was pertinent to what y'all were learning today. I'm gonna go back to sharing my screen. Okay, so here we are. So I kind of went through the flow of how we're gonna gather the information, how we're gonna go with the flow of filling out a client's tax return. So the first thing is when you meet with the client for the very first time, there's always a list of documents that the client should be bringing to that appointment. And and when I say appointment, that's really kind of old school because everything now is just virtual. It could be a virtual appointment. You could be seeing clients via Zoom. You could be, like I said, we got the app. You want to make sure that they're uploading this so that you're not doing the whole back and forth of getting documents. But if they're going to meet with you, you want to make sure that they're bringing everything to the appointment, because there's nothing worse than getting through a tax return. The client has left important documents and then you can't finish it. I'm be honest with you, I've seen that with a lot of clients. I have two cousins who always do this. It's always just your kinfolk will leave the birth certificate or will leave the social, and that's because they're really just price shopping. We do have a feature where you can just give someone an estimate to where you're not sitting here doing all this work, because when you do the work, you're expecting to complete this tax return because you're expecting to get paid from it. So if they're coming and they're not bringing everything, personally, I just set it to the side. I don't even start on it because I like to go ahead and start and finish. Sometimes, of course, you're going to have questions. They may have to go back and get something else, like a bank statement or something. But if they're coming to the appointment and they don't have these documents that I'm going to talk to you about, I take what they give me and I just set it to the side until they bring me everything I need. And this is from 20 years of experience and from getting through a tax return and somebody burning you. That's where I'm really coming from. So, like I said, if you're meeting with the client virtually, then the client will need to upload these documents via the app or the portal. And this list may seem extensive, but like I say, it's very important to have all this at the first meeting so that you can complete it in one meeting. And this will keep you from doing the whole back and forth and keep them from going somewhere else because they just price shopping. It's very important, and I've had to learn this, is to get the client to sign a letter of engagement at the first appointment, which is going to outline the scope of your work, and so that they clearly understand when she prepares my tax return, she gonna file my tax return. Because if you don't have it and you file it, then they come back and say, "Oh, well, I didn't tell her to file my taxes." You're kind of just stuck out there on alert. He said, she said. So I eliminate all of that. I came up with a letter so that they understand this is what I'm going to do for you, and I will show you all that, and I'm going to file your tax return when it's over. So if you leave off something important, it's just going to be left off. Like I said, there's nothing more disheartening as to have to put in all that work, and while you waiting on them to bring you back a form, they don't went and file somewhere else. So what they need to be bringing to you is an unexpired state-issued license or an ID card for themselves and their spouse if they're, filing jointly. Social security cards for each taxpayer, spouse, dependents. They can bring you paper copies if because everybody got their own closeness with their clients. If this is somebody that and if you're meeting with them in person, okay, if they want to just make copies and bring it to you because you know that they got 3 kids, you can take that. That'll save you from having to make copies. If they're uploading it, even better. Birth certificates, copies of info for income, deductions, and their credits. When I'm talking about credits, school credits, if they're paying student loan interest, anything like that. Bank account and routing information. Identity protection PIN, very important, because if they have an identity theft protection PIN and you don't have it, you cannot e-file their tax return. It's going to get kicked out. Types of income that they need to be bringing: W-2s from all their jobs, 1099-G if they got unemployment, SSA 1099 if they're getting benefits, SSA interest and dividend statements if they're getting that, and miscellaneous forms. I need to add on there 1099 NEC because, like I say, this is a new form and this has been done for a while. Anything that they're going to want to use to see if they're going to itemize: mortgage statements, charitable contributions, retirement contributions, medical and dental bills, child care expenses, a statement from their child care provider, which needs to have the name, tax ID number, phone number, address on there. 1099-T if they're in college or if their kids are. 1099-E if they're paying student loan payments. Records for supplies if they're a teacher. Other documentation: 1095-A, health care coverage. Anything that they got in the mail that say important tax document, even if they haven't opened it, bring it or upload it so I can see what it is. If it's a new client, I want to see their prior year tax return. I don't want no surprise. I want to know. And then there are other questions that you want to, ask. And I know this may seem like a lot, but it's important to have all these documents, as I say, at the first appointment, so that you can complete the tax return in one meeting. So, any questions about any of that? Let me ask you a question. How many of y'all how many of y'all use a professional tax person
I do.
versus doing your own taxes?
I do.
Okay. Is there anything else on here that they may have asked you for that you did or that I didn't talk about? Probably not. Because like I say, I try to get everything. Only thing that I didn't talk about is that, and this comes with when you're talking with your clients. If they bought a new home the prior year, you want to get that HUD-1 statement because you want to see how much they paid in like prepaid interest and points. But again, we can talk about that because as you get with your clients, you'll learn how to tweak it, because as you get to asking questions, you'll know what to ask them for. So let me look at this. So this is a form that I use, especially when I'm on the phone talking with the client. Because again, a lot of my stuff, because I've been doing it so long, is over the phone via, Zoom, or occasionally I do see them in person. Can y'all see this form? It says client intake form.
Yes,
Yes.
I see it.
Okay, perfect. Okay, so this is basically the form that I use if I'm talking to them. I want to get their full name, and you can give this to them to fill out, but make sure that they print legibly, because you want to make sure the names are right. You want to make sure that the address is right. You want to make sure that the phone number is right, because sometimes the address on their driver's license is not their current address. Then you want them to kind of check off everything that they might be bringing. Or if you're asking them questions, you can just kind of go down this little checklist. So this right here is helping you too when you're preparing the tax return, so you're not forgetting anything. Oh, they had a job. Oh, they got, something else coming in. Oh, okay, I forgot to get that, or I don't see that on this tax return. So this right here kind of helps you as your little mini checklist. Then you start asking them questions, especially if you have a younger taxpayer. If they come to you, they're like 19 or 20. Can anyone claim you as a dependent on their tax return? Kids that are in college, parents can still claim them on their tax return up until age 24. So if you have a young tax preparer, you might want to ask them that. If they don't know, tell them that they need to call their mom and daddy and ask them, because you don't want to put them down as single and then their tax return gets kicked back because mom and dad has carried them, or worse yet, They file before mom and dad is gonna carry them. They done already filed. Mom and dad has to now file a paper return because now you got to go back and you got to fix this. I've seen it all happen. I just had this with a client. Their daughter, she living on her own with her boyfriend. She's like 21, 22, and she's in college. And so she's like, oh, well, I can just file my own taxes. I'm good. Yes, you can. But when you carrying yourself, it's finna cause mom and daddy to owe $3,000, and they won't owe $3,000 if they carry you. You might want to revisit that whole situation, because under the age of 24, when they file their taxes, all they're getting back, unless they have a child, is what they paid in taxes. That's all they're gonna get back. They aren't even they wouldn't even get an exemption for themselves because they're underage. And so all there, if they only paid back $200 if they only paid in $200 in taxes, that's all they're getting back. They're not getting earned income credit because they're not old enough. So mom and dad over here letting you carry yourself, and they finna owe, and you getting back $200. No, we're gonna flip this so mom and dad don't owe $2,000 or $3,000, and you still get your same little $200 back, and it's a better situation for everybody. So again, those are the things you got to ask questions about. Did you pay more than half the cost of keeping up your home throughout the year? That's important, because if you didn't, you're not the head of household. If I have a house and I got my son living with me, I'm the head of the household. He may not make as much. He may, it's my home. I'm the head of the household. I'm paying the bills. Yeah, you might be giving me something on the bills, but that's not your filing status. I can carry you. You can't carry me. I can carry you to the extent that it's going to benefit me for tax purposes. Head of household, you can carry, just FYI, you can even carry your parent, even if they're living in their own home and you're helping take care of your parents. I do that. I see that all the time. Kids are carrying their older parents. Rarely gets questioned. I've never seen it get, questioned, because as your parents get older, it's understood that their kids are going to be taking care of them. Yes, they may be where they are totally independent and they don't need you to carry them, then that's great. But if mom is in her little house and you're having to help mom buy groceries, you're having to help her pay her bills, you might want to be carrying mama. Did you make any energy saving improvements to your home? The biggest thing is the solar panels now. I have clients, and when they get those solar panels, that's helping them out tremendously with their taxes. Do you have any first time home buyer credit that needs to be repaid? Because he's gonna tell you you're repaying it. They're not getting it anymore, but you're repaying it at $500 a year. Did you and your dependents have health insurance this last tax year? Yes. And I'm another question I'm gonna slide in there is it through the healthcare marketplace? If it is, yes. Then we need to know how many months were you covered, how many people were covered, and then I need that 1095A because I need to see it. And then you just want to get them to attest that what you've asked them is true. Signed, dated, because this is your CYA mode paperwork. Then on here, the next page, you can ask them, how do you want to get paid? Like, how do you want to pay? Excuse me. Do you want to pay up front? Do you want to pay me with a cash, check, debit card? I wouldn't take a check if you don't know them. Do you want your fees withheld from your refund? If they say yes, okay, cool. Then we know we're going to apply for a refund advance. If you are due a refund and you elect to have your fees withheld from your return, you may, excuse me. Anyway, we're gonna take that out because that ain't even possible. What that was saying, and I need to go back and just read that, is that they can have direct deposit. We can print them a check, because I am actually able to print checks in office, or they can get it on a debit card. I need to correct that, so ignore that part. So they can either get direct deposit, debit card from me. I can give you one, and you can have your money put on there, or I can print you a paper check. Believe it or not, I have a client that still wants a paper check. I don't know why. In all this technology, she has a bank account, but she still wants a paper check every tax season. So I have to get a stack of 500 checks. I'm only going to use one the whole tax season for her, but it's all part of the package. We don't have to pay for that. We get the checks for free. We get the debit cards for free because we want to be able to offer the clients what they need. And then, oh, here it is right here. So direct deposit, and if that's the case, I'm sorry, then you want to capture their banking routing and account number. Let them write it. Yes, if they give you a copy of it, great. If they just want to write it down, let them write it down, because if it's wrong, you want it to be their wrong and not yours. Prepaid debit card or a check. And then right here, this is where you just verifying. Ignore this. This is where I actually had recreated this form for another person. I left her, tax information there. So your forms when I have this, but this is where you're actually looking at the taxpayer and their spouse, and you're collecting all this information. Because if they elect to have their tax prep fees deducted from their refund, their driver's license has to be valid, because we have to input all of this information in. Excuse me. So, and again, I just, you're going to document their names, the social security number, and you don't have to do this, but I'm giving you a form to help you collect information to keep it neat. Because otherwise I have tablets, y'all, when I write down all this information, and I just keep these tablets from tax season to tax season. Do I have this form too? Yes, I do. But when I'm talking to somebody, I may just jot the notes down. You don't want that. You want to keep your information neat, concise, so that when you have to go back and look at it, it makes sense to you. So that's what this is for. Now, something that we touched on, very important, the identity protection pin. That's very important. And can y'all see my screen?
Yes.
Okay. So some people may haven't heard of that. What is an IPPIN? An identity protection PIN is a 6-digit code number that the IRS provides to people who have been victims of identity theft or who've opted into the IPPIN program. And this is something new. I'm seeing more people do this, especially if you have kids. Dad might want to carry them, or mama got them. Okay, so I just said, just go get a PIN. That way you don't have to worry about daddy trying to sneak and carry them, or whoever else. If the IRS has assigned an IPPIN, then the taxpayer is required to provide it to e-file their tax return. It's meant to provide the extra measure of protection against identity theft. So if your client has been a victim and then they were issued a PIN, or if they opted to sign up for it, it's going to come in the mail. And that number is only good for that current tax year. Next year, they're going to get a whole new number. So every tax year is a different number. So they can't come in there with the same PIN that they had before, because it's not going to work. It's going to get kicked back out. And if they cannot retrieve it, so luckily now you can go on, they can call a number and have a duplicate one sent back out to them, because again, you're not gonna be able to file it. You're gonna have to mail it in. And this is a sample of what the form of the letter is gonna look like that comes from them. They call it a CP01A. It's gonna have the tax year, the date that they sent it, and a phone number to contact them on. To say, hey, we have assigned you a number. This is the why. Either you were a victim of, identity theft, or you told us that you were concerned, or you just requested one. The PIN number is going to appear down here. See right here, it says, keep this letter in a safe place. You will need it to prepare your tax return. I've seen clients get it, and so sometimes a client may not know they were that it was something funny going on with their tax return, because the IRS sometimes does not tell you. If you carried your child, say for example, you've carried them, and then dad tried to carry them, okay? And so then dad had to mail his in, but you did not really carry them. So they may not let you know that somebody else is trying to carry them. They may ask that person to send us proof. That person can't send them proof. They're going to send you a pen. You don't even know why. You have no clue, or there's something that they have detected in the activity. So the client will get this in the mail. They don't know what it is. They read it. I don't owe no money. They throw it away. Then you're going to have to get a duplicate pen. So just make sure you ask them for it, make a copy of it, put it in their file, but just know the next tax season, you're going to have to get another one. So that's one of the most important documents as well. Once you met with the client, you got all their, data, or they brought all their documentation, and you're sitting down talking with them, and then you're trying to decide their filing status. Because their filing status determines their refund amount. And because it determines the rate at which they're going to be filed. So you got 5 statuses. You got single, married filing jointly, married filing separately, head of household, qualifying widower with a dependent child. People do not, so I ain't gonna say everybody. I had clients, I'd be like, what's your filing status? Single, head of household, you're not both. Do you have, so then I have to ask questions. Do you have kids? No. Do you carry your mom or somebody? No. Okay, so then you're just single. Because they be confused, child. But the most famous one is single, head of household. You're not filing both. So you want to ask those questions. They're filing single status if on the last day of the year they were unmarried or legally separated from your spouse under a divorce or separate maintenance decree, and you do not qualify for any other filing status. Now, I will get married. You know what? Let me just go through all of them. Married filing jointly filing status. So you are married and both you and your spouse agree to file a joint tax return. On the joint tax return, you are combining your income and deduct all combined allowable expenses. You can file this status even if one spouse does not work. That one spouse that does not work is not your dependent, because I had people say, oh, I'm gonna carry my husband, but he's not working. No, you're not. You're not carrying your husband. Your husband's not carrying you. You're married filing jointly. Married filing separately. That's another status. You must be married. This method may benefit you if you want to be responsible only for your own taxes, or if this method results in a less tax than a joint tax return. So if you and your spouse do not agree to file a joint return, you may have to use this status. Now, let me tell you, if they do married filing separately, you still have to list the other spouse's name and social on that tax return so they can cross-reference them. So even if we married, we not filing together because he owed child support, and I'm not going to have my tax refund garnished because of his child support, or he don't want to file with me because I owe student loan debt and he ain't trying to pay off all of my debt because I'm behind. You're going to file separately. So my money is my money. Your money is your money. You will see this. You cannot use the married filing separately, and because your tax return will not go through, because you got to have that other spouse's name and social listed on there. So some people, you will see this, we've been married for 5 years, 10 years, we ain't never filed together. I filed single, he filed single. You will see that. Is that the correct position? No. Is that what they've been doing all this time? Yes. Are you gonna rock the boat? It's up to you. I don't rock the boat. Do what you, hey, this what you do. This your business. Ain't got nothing to do with me. Head of household filing status. In order to, that's your most well, I ain't gonna say that's your most advantageous filing status, because married filing jointly is really a great one as well. But in order, but that's where you're gonna get that's where you see the big money, the $10,000 refunds, the $15,000 refunds, because they got the kids, they got low income, and they're getting the earned income credit, the advanced child tax credit. They may be going to school, so they're getting the bigger refunds, and everybody who's single want to be there because they mad because I don't know why I got to go to work every day, and I'm only getting back $200, and they over here got these kids and they getting back 15,000. It's not fair. It is what it is. In order to file head of household, you must meet the following requirements. You are unmarried or considered unmarried on the last day of the year. And you'll see a lot of times things with the tax rules is, what were you on December 31st? If you was living with your spouse, you married. If you were separated, you separated. If tax as far as I remember, the laws do change. I have not checked up on this. I don't think Texas has a legal separation. I always tell people that. So if you say you separated, you just separated. Because I don't think you can go file legal separation papers in Texas. I could be wrong. But you're also using this status if you paid more than half of the cost of keeping up the home throughout the year. And a qualifying person lived in your home for more than half of the year, except for if they were off at college, because even if they're off at college, they're still considered living in your home because you're still taking care of them. However, your dependent parent does not have to live with you. So you can be single. I got 2 kids. I live alone. My boyfriend might be in and out or whatever. They ain't got nothing to do with this. You live alone. You take care of your kids. You pay your bills. You're head of household. You're single. You live alone. Your mama live in her house, but you happen to take care of your mama. You're head of household because you're gonna carry your mama on your taxes, and you are head of household at that point. Now, I have one situation with a client. This is my godson. He bought a home. He doesn't have any kids, but his sister and her child moved into the house with him. He pays most of the bills. His nephew, Bryson, is not his dependent. He don't carry Bryson on his taxes, but for the purposes of tax preparation, Bryson living in his household qualifies him as head of household. So I list Bryson on his tax return as a minor living in his household, but not his dependent. Shantavia, which is his mama, Shantavia still carries Bryson. She's not filing head of household because she's not what? The head of the household. She just filed single, she carried her child, and she go on by her business. He gets that tax advantage because it's his house. The mortgage is in his name. He paying most of the bills. So he gets that advantage of that. So it's many different scenarios in there. And that's why you got to talk with your clients and you got to pull it out of them to see what's going on in your house. The last one, I have never had one of these, but it is a thing. Qualifying widow or widower with dependent child filing status. So if your spouse died in 2014, just say 2022 or 23, whatever, you can use married filing jointly as your filing status for that tax year. if you otherwise qualify to use that status. The year of death is the last year for which you can file a joint return with your deceased spouse. You may be eligible to use qualifying widower, or widower with dependent child as your filing status for 2 years following the death of your spouse. For example, if your spouse died in 2012, you have not remarried, you may be able to use this filing status for 2013 and 2014. This filing status entitles you to use a joint tax return rates and the highest standard deduction amount if you do not itemize, and this status does not entitle you to file a joint return. So please note, taxpayers who are eligible to use more than one filing status usually chooses the filing status with the lowest tax rate. The lowest tax rate, the bigger your refund, possibly. But so like I say, I've never had one of these people, or we didn't talk about it, but I just know I've never had one that I filed qualifying widower with a dependent child. Most people are just single. But these are your filing statuses. So you have to talk with your clients. You got to get into their business a bit, find out what they got going on. And you definitely, if it's a new client, want to look at their prior year tax return, because you don't want to do some stuff that's going to trip them up, or that's going, and guess what? It's okay to say no to a client. It's okay to look at their prior year tax return and they was doing some crazy stuff and you don't want to be bothered to say, I'm not going to be able to do your tax return, because trust me, I do it enough times every tax season. I've learned, look at their prior year tax return, because the last thing you want to do is to sit down and you do someone's taxes as the tax preparer and you're doing it right, and they've been doing some jacked up stuff over here with somebody else, and then they get caught up because you don't file this accurate tax return. Because guess what? It then becomes, when the story gets retold, you messed up their taxes. That has happened to me. Of course, who was it? A family member. My cousin filed his taxes. He had a business and he had a job. On his job, he made like $35,000. His business, he owned a truck. He hired somebody else to work for him and drive his truck, his 18-wheeler. His 18-wheeler made over $100,000. Well, when he took his paperwork to Liberty Tax Service to get his taxes done, all he took was his W-2. He didn't take that 1099 for $100,000. So of course, when Liberty did his taxes, because his tax status was just a sole proprietor, he wasn't an LLC, he wasn't any other taxes. So that $100,000 1099 should have been flowing to his tax return, but of course he knew enough not to take them that. Takes his W-2, he get back about $3,000. Then he comes sending me all of these receipts for the truck and wanted me to file his truck tax return. Well, guess what? Your truck tax return is not going to be accurate because you have to file this with your W-2. I still did my part, sent him everything. He didn't like the figures because guess what? You got back that $3,000, you wasn't entitled. You really owe like $12,000. And the story is still being told to this day. Lynn messed up my taxes. I've had to explain that to a couple of family members. And then once I explained to them, and that's something I don't really get into, I don't divulge other clients' businesses, but hey, if you want to put my business out there, let's just go ahead, let's just get this straight. He owed. And so once I explained, they're like, oh, now that makes sense. Cause I'm like, but the story is being told, I messed up his taxes. That's the part I be focusing on. Like, because I'm very conscious of the quality of work that I put out. I'm very happy to say in 20 years of doing taxes, I've never had a client to call me and say, I'm getting audited. What am I gonna do? Because I don't do that. I just don't do that type of business. So lesson learned. definitely look at, and so I didn't see the tax, because I got the question to him, because I'm like, okay, so you sent me, but I'm like halfway through his tax return. Then I find out he filed with Liberty and he sent me that. So then, so it was just a whole mix up. So look at the information up front. And if you decide that you don't want to take them on as a client, I promise you it's okay, because you will save yourself a ton of explanation, headache, and grief in the long run. Does anybody have any questions about filing statuses?
One question. So you say you can use your parents
Mm-hmm.
if you're a head of household. Could you do it if you were married?
Yeah,
Okay.
yeah, you can.
Okay. Thank you.
Mm-hmm. And and again, I'm telling you this, it'll all really start coming together as you start doing tax returns. So I'm gonna give you different scenarios of of what's going on. So as you start doing it, it'll make more sense to you guys. Because right now I'm just kind of giving you a little bit of the background part of it. So again, what determines your filing status is if you have dependents also. So then you might say, okay, so who qualifies as a dependent? That's very important. Identifying and determining the correct number of dependents is a critical component of completing a taxpayer's tax return. The deduction for personal and dependency exemptions is suspended for the tax years 2018 through 2025 by the Tax Cuts and Jobs Act. I'll get into that later. But okay, so although the exemption amount is zero, the ability to claim a dependent may make a taxpayer eligible for other tax benefits. For example, the following tax benefits may be associated with a dependent: child tax credit, additional child tax credit, credit for other dependents, earned income credit, child and dependent care credit, head of household filing status, and then there's a few other ones. So who qualifies as a dependent? It's not, I mean, it's who you think it is, but sometimes it's not who you think it is either. So dependents are either a qualifying child or a qualifying relative of the taxpayer. The taxpayer spouse cannot be claimed as a dependent. So like I told you, they'd be saying, oh, I'm going to carry my husband. No, you're not. You're filing jointly. You're not carrying your spouse. Your spouse can never be your dependent. So some examples of dependents include your child, your stepchild, a young brother, not just a young brother, a young sister, or their descendants. So the test to determine a dependent, and this is, I promise you, this is going to be probably like the most boring part of it all right here, but it's very important because you want to make sure when you're sitting down with that taxpayer, because I'm going to tell you what they do. And I'm sure you know people and you already know, well, I want to carry my sister's child. I want to carry my brother's child, but do they live with you? No, but she got 5 kids and I want to carry one of them because I want to get back some money too. I'm teaching you what the law say. And that's all I'm saying to that, because grandparents, because I have clients, the grandparents are responsible for their grandkids. They're raising them. They're sending them to school. They're taking them to their doctor's appointments. That's their dependent. Aunt Jane over here only see little Billy once a year at family reunion or maybe at Christmas or whatever. And because her sister got 5 kids and she want to carry her sister's child, and her sister done said she can carry him, and why can't I carry him? Because the law say you can't. That's why you can't carry him. But we're gonna talk about this. So a test to determine a dependent. So as we said, a dependent may either be a qualifying child or a qualifying relative. Both types of dependents have unique rules, but some requirements are the same for both. So to determine if an individual can be claimed as a dependent, begin with the rules that apply for both the qualifying child and the qualifying relative. The first test, a dependent test. A taxpayer or a taxpayer spouse, if you file a joint, who may be claimed as a dependent on another taxpayer's tax return may not claim anyone on his or her tax return. So if I'm 23 years old and I live on my own, but I'm in college, and my mom and daddy are gonna still carry me on their taxes as a dependent, I don't get to have a dependent. It's not a free flow, it don't flow both ways. If I'm somebody's dependent, I don't get to have a dependent. So if I don't get to have a dependent, I'm already, that test is already gone, strike, no. Part one of the intake and the interview question sheet is, can anyone claim you as a dependent on your, you or your spouse as a dependent? If the taxpayer answers yes, they cannot claim a dependent. Use your interview skills because some taxpayers, particularly students, may not be sure of the answer to this question. An individual is not a dependent of a person if that person is not required to file an income tax return and either does not file an income tax return or files an income tax return solely to claim a refund or estimated or withheld taxes. If this is the situation, the taxpayer should answer no to, can anyone claim you as a dependent? So let me explain that. So I'm 22 and my mama don't work and she don't file taxes. She's the only other person who can't carry me. If my mama's not going to carry me, then I can say no. So again, I'm gonna say it again. If I'm at the age where someone can carry me, but they're not gonna carry me, I can say no to that question. The joint return test. A married person who files a joint return cannot be claimed as a dependent unless that joint return is filed only to claim a refund of withheld income tax or estimated taxes paid. Again, and I keep using the little college students because this is the one that just makes more sense to me. I'm underage still. I'm 21, 22, but me and Bobby was so in love when we got married because I just love Bobby and we just wanted to get married, mama. But mama's still paying for my college. But me and Bobby want to file taxes too. But me and Bobby can file taxes, but only because we gonna file our taxes, but only because we want to get back our little $200 that we paid in. So we can file jointly to get our little money that we paid in, but I'm still somebody else's dependent. And Bobby mama is probably still gonna carry him too. So we can file to get our little money back, but our parents is still carrying us because we're underage. You're not gonna see it that often. I'm just trying to explain it to you so that you'll know what they're talking about. You're not gonna see that. I've never seen that ever. But it's in here, so I'm just trying to explain it to you. And again, the one that makes more sense to me is the underage filers, because when your kids go off to college, they think they're grown. They already think they're grown when they walk across the stage. And they want their independence and they want to file their taxes, but pump your brakes. Pump your brakes. And one thing I normally do for my taxpayers is when their kids start working at 16, 17, I do the kids' taxes free. And I do that so I can control narratives like this. So that little Johnny or little Susie is not going off filing their taxes single. Now you done messed up mom and daddy. It's gonna take me 5 minutes to file their little free tax return because they ain't getting back nothing but $200 anyway, because they only worked part-time while they was in school. So like I say, I do that to control the flow because I don't want them going off and taking a tax return to somebody else who don't know their situation, who just trying to get some money back and padding their tax return. And then now you done messed up mom and dad, and then it's a whole fiasco because now we got to fix little Susie tax return so then I can file your tax return. So, like I say, that's just one of those things that I learned over the years. Let me just go ahead and do their kids' taxes. I do the kids' taxes free until they finish college. And that's to to avoid all these issues. The next test, citizen or resident test. To be claimed as a dependent, a person must be a U.S. citizen, a U.S. resident, a U.S. national, or a resident of Canada or Mexico. If a U.S. citizen or U.S. national legally adopts a child who is not a U.S. citizen, U.S. resident, or U.S. national, this test is met as long as the child lives with the taxpayer as a member of the household all year. If all other dependency tests are met, the child can be claimed as a dependent. This also applies to the child who was lawfully placed with the taxpayer for legal adoption. So I can have a child who was not a U.S. citizen, resident alien, or U.S. national. If I'm adopting them and they live in my house, it's because adoption is a process, but they living in my house, I'm adopting them, but they weren't born here. I can still carry them, but I can't carry that little child that I'm sponsoring who lives in China. This child has to live here. They have to live in my house. That's they have to live in my house. That's the biggest, is where does this person live? If they live in your house, that starts the dependency test right there. Foreign exchange students generally are not U.S. residents and do not meet the citizen or resident test. They cannot be claimed as dependents because they are just here to go to school. They're still their parents' responsibility. They're just a foreign exchange student. Yes, they live in your house, you open up your home, but they're not your dependent. This is just a business deal. This is just, for them to come here and learn or whatever, and they're going to go back home, but they're still their parents' dependent responsibility in the country that they're from. Same way, if your child was a foreign exchange student in Paris, it doesn't matter that your child live in Paris. That's still my child. They're a foreign exchange student, keyword student. I'm still paying for their housing. I'm still paying for their meals. They're my dependent. They may not live in my household, but for tax purposes, they're still my dependent. They are still considered under my roof. So there is a test for qualifying child. So the next step is if the taxpayer is a dependent, has a dependent. The next step to determine if the taxpayer has a dependent is to apply the rules for a qualifying child. If the tests are not met, see if the tests for a qualifying relative are met. So they may not be my dependent, but they may be a qualifying relative. Remember, a person must meet the requirements of either a qualifying child or a qualifying relative to be claimed as a dependent. Relationship test. So to meet this test, the child must be the taxpayer's son, daughter, stepchild, foster child that's placed by an agency, not just this little child came to live with me because he don't like his mama. Placed by an agency or a descendant of any of them. So it could be my son or my son's daughter. It could be my daughter or my daughter's daughter. It could be my stepchild or one of their kids. It could be a foster child, or if I'm so gracious that my foster child had kids and they live with me too, then that meets that test. The taxpayer's brother, sister, half brother, half sister, step brother, step sister, or a descendant of any of them. So again, my brother, my sister, my half sister, up to step, or their descendants. An adopted child is treated the same as a natural child for the purposes of the relationships described above. For example, an adopted brother or sister is a brother or sister of the taxpayer. An adopted child includes a child who was lawfully placed with the person for legal adoption. So again, adoption and foster kids apply. Your siblings who live with you, because sometimes some of us have siblings who are younger. If they're related to you by blood or by marriage, they meet that test. Age. To meet the test, the child must be under the age of 19 at the end of the year and younger than the taxpayer or the taxpayer's spouse if they file it jointly. And they also must be a full-time student under the age of 24 at the end of the year and younger than the taxpayer or their spouse if filing jointly. I can't be 19 and I'm carrying my twin, or I can't, you know what I'm saying? Like, no, the child has to be under the age of 19. And the child needs to be, excuse me, or they can be a full-time student up to the age of 24. We've seen it, like my sister and I, it's like 9 years difference in our ages. My oldest brother is 20, like he's old enough to be my daddy. He got kids my age. I gotta be younger. If you're claiming a child, that child has to be younger than you. You can't claim somebody older than you just because you living in your house and you taking care of them, but they older than you. No, they got to be younger, or they got to be a college student. So to qualify as a student, the child must be enrolled the number of hours of courses the school considers full time during some part of at least 5 months of the year. So they got to be full time either in the spring and summer, or in the summer and the fall. So they can't be part-time students. No, they need to be at full-time at some point. They could be any age if they are permanently and totally disabled at any time during the year. An individual is considered permanently and totally disabled if both of the following conditions apply. He or she can't engage in any substantial activity because of a physical or mental condition, or a doctor determines that the condition has lasted or can be expected to continue for at least a year, or can lead to their death. So if you have a child in your household that's disabled, or they become disabled, then okay, yeah, you can carry them. Residency test. So then the residency test, the child must have lived with the taxpayer for more than half a year. He can't come live with you 2 months out the year, then you think you're gonna carry him. No, the child has to have lived with more than half the year. So if they come in June to December is only 6 months. That's not more than half a year. The IRS is very they're a stickler about this. So when you get to talking to your client, they say, oh, well, she came in October. They don't meet the test. If the child was born in October, which is a different thing, born in October, they meet the test. But if someone come to live with you in October, they don't meet the residency test, because it's very clear that they have to have lived there more than half of the year. The taxpayer home is any location where they regularly live. It does not need to be a traditional home. For example, a child who lived with the taxpayer for more than half the year in one or more homeless shelters still meets the test. So if the child does not live with you, if the child has not lived with them, if the child is not a child or a sibling of theirs, foster or step, and they have not lived over 7 months, they're by law, you're not supposed to be carrying them. Does that make sense? Are y'all still with me, or did I bore y'all to death?
I was saying yes, but I
It
was on
makes
mute.
sense.
It
Yeah,
makes
I
sense.
was just on mute. I was talking on
Okay.
mute. But yes, ma'am, it makes sense.
And they'll come to you and they like, oh, my sister got 5 kids, and she said I can carry one of them. Does your nephew or niece live with you? Do you pay for their school clothes? You know, you got to get to asking questions. Now, do people do it? Yes, they do. Do people? Yes, they do. But legally, are they supposed to? No, they're not. And that's all I'm gonna say about that. So the residency test is one of them. Are they under a? Are they younger than me? First of all, are they related to me by blood or by adoption or placed with a foster agency? Are they younger, and do they live with me for more than 7 months out the year? So those are the questions that you need to be asking your clients to make sure you're filing a legal tax return. Because what'll happen, and I've seen it happen, because Monique let her cousin carry one of her kids that the daddy been carrying, but she mad at him and she not gonna let him carry the baby this year. But she don't tell him that. She just gonna try to beat him to the punch. And Monique carried him. Monique got the money, bust her down, split it with her. He mad because he trying to carry him. So guess what he finna do? Send in his tax return. He gonna mail it in because he determined he gonna get his money because those are his kids and he been carrying them. So now they wrote him and Monique cousin, done wrote her letter. We need proof that this child lived in your house. We need proof that this child is related to you. And you got 30 days to get this proof back to us. And when they say they want proof, they want school records that shows the address where the child lives. They want a doctor statement that shows the address where the child, you know what I'm saying? They want all this legal document, or what they consider would be legal documentation from these third-party agencies who have no reason to lie. And then they're going to look at that and they're going to determine who has the legal right to carry this child. And probably it ain't gonna be neither one of them really, because they don't live with the cousin and they don't live with the daddy. But the parent has more of a right to carry their child, even if that child does not live with them, if the parents agree upon it. And there is a document that the custodial parent can fill out and sign that I would behoove anyone to get if you're not, may be on good terms now, but good terms don't always last. They need to have that form filled out that says, little Bobby live with me, but I'm allowing little Bobby daddy to carry him. And as long as he got that documentation, he's good because he's the parent. He can do that. Nobody else can do that. Grandma can't do that. Cousin can't do that. Auntie can't do that. Only the non-custodial parents can produce this form that says this child does not live with me, but I can carry them. So one of the things that when you get into it with your clients and you're asking them questions, and I always ask questions, hey, have you had, did you get your refund last year? Did something, happen? You want to ask those questions because the last thing you want to do is fill out somebody's taxes, carrying a child that they not really got told that they can't carry. Or there is some kind of question in the air about who can get. You don't even want to get into all of that because what that's doing is, one, it's tying up your money, and two, it's tying up your name. And the reason why I say it's tying up your name because the IRS has a database where they keep a record of every tax return I've ever filed. And they're looking for patterns. And if you keep having a pattern of dependence that's questionable, they're going to be looking at you funny. And that's what you don't want to happen. So you want to make sure you're filing good, clean tax returns that's not getting kicked back, that's not being questioned, that don't have any type of drama attached to them, because that's going to get attached to your name. And literally, one day, I hope I can think to show you, I can literally go in and pull up, and they can tell you how many tax returns I filed every tax season. They have a record of it. And trust me, when they start to want to get you, they're going to go down through there. And then everybody's tax return you don't ever file becomes open to scrutiny. And they're going to go through everybody's tax return. There's going to be a whole bunch of people mad at you. So I know that was a around the world way to get to a simplified answer of make sure that they're younger, make sure that they live with them, and make sure that they're in, was it younger, live with them, and are kin to them. Because again, people will come in with when it comes to tax season, baby, everybody trying to get that money. Everybody want the bag. Everybody want the bag. But you don't want to be left holding the bag with nothing in it, because the longer it takes a tax return to get processed, the longer it takes you to get paid. And I don't do this for my health. I do it to make money. Any questions about that?
No, ma'am.
Okay. Miss Jareen,
Yes, ma'am.
did that make sense to you?
It did.
It did. Okay, so there is there's a modular 1 summary y'all can go in and download. It just recaps all of what we talked about. And again, this is all theory type of stuff. This is stuff that you have to know. But trust me, as you get to doing tax returns, it's gonna become second nature. And when you get to talking to them and you get to asking them questions, it'll click. Because the first thing is this your child? Why the mama not carrying them? Why the daddy not carrying them? Because literally there is a due diligence checklist that we have to go through as a paid tax preparer that asks you all these questions. And one of the questions is, if this is not your child, why are the parents not carrying them? And so your documented answer better be, because the child resides with me from April to December. That better be your answer. And because if the tax return gets audited and they're contacting you, asking you questions, you want your documented proof. You want your CYA. This is my CYA. I asked the question. Now, if they lied to you, hey, that's their lie. But I asked the question and I documented what they told me. And that's all you can do. And I would tell clients, you can come in here and tell me whatever, or better yet, I can put whatever on your tax return. At the end of the day, you got to pay that money back. As a paid tax preparer, yes, there are certain fines that we can pay if we lie. But if I prepare this tax return as erroneous as it is, based off of what you told me, I'm scot-free. That's on you, boo. You got to pay back that money. You're going to be audited every year for the next 10 years, and you can't claim a child. So, that's kind of where that's how that, plays out. So you want to make sure, like I say, you're asking the questions, you're getting the information, you're documenting the answers. And when something does not sound right, it's okay to say, I'm not the right person for you, or I'm not going to prepare this, tax return. And I even have clients that, depending on, how, especially if they knew or whatever, and I'm talking to them, look, do not do this. I'm not going to do this. You don't need to do this either. And just be honest with them. Because at the end of the day, you don't want to be trying to explain why why you have 10 tax returns with carrying kids on them, and they weren't living with the person that said that they were living with them. There was, back in the day, like literally, I had a client, he came to me, he's African. Well, he wasn't, he was a potential client, I'm gonna say that. I did his taxes. He made about $120,000. I think he might have paid in like 15, so he still owed money. And he was like, "Well, don't you have some kids that I can carry?" No, I don't. Like, I don't want no child meal, around back in the day. Yeah, your tax preparer could find your kids, and they know this person, that person. We don't even get into any of that. Do not get into any of that. My nephew, who I helped him get his tax service started, he listened to me on some things. He did not listen to me on other things. He's now serving a federal sentence for tax fraud, like 26 counts. It's very real. They will get you, and it's not taking as long as it used to. So that's all I'm gonna say about that. We're gonna move on to something else. I was gonna jump into this tax return with Mr. John Adams and show you guys how we input the information. Did I not upload the document? Okay, well, I'm gonna have to go back and add it in there, but let me just pull up the information. I thought I uploaded it, but apparently I didn't upload it correctly. Can y'all see my screen that says John Adams?
Yes, ma'am.
Okay.
Yes, ma'am.
Okay, perfect. So I was gonna go into showing you guys how we enter in a tax return, but I'm gonna hold this off to next week. Well, not next week, but the following week. Because I want to be where we can get into this and y'all can follow along, and we got 10 more minutes left in class. So I'm gonna pause here, but if y'all want to, I'm gonna upload it. So if you want to go out there and just look at it before our next class, feel free to read through that summary. Like I say, that information that's important, and it's gonna make more sense as you start doing a tax return. So just read through it. We're not gonna have class next week because I will be in Frisco. But if you need me between now and then, if you have problems getting into the software, let me know and I can try to work with you. But I think I probably overloaded y'all with a whole lot of information tonight. Does anybody else have any questions about anything that we covered so far?
It's a
Just
lot of
one,
information, but it flows. You can follow it.
You can find, okay. And like I said, and this right here is probably like the most wordiness of what I'm gonna give y'all. And like I said, they kind of go around the world to explain it, but it's like you gotta know what's not included so that you can pinpoint on what is. So like I said, that's probably the most wordy that I don't think anything else is that, well, it can be. But to me, that was a lot of just in. But like I say, as we get to going through and we're inputting here, so next class period we're gonna actually sit down and we're gonna input his tax return, and we're gonna go through the screen so that you can see how the information flows. He's a very simple guy. He's a single guy. He don't have any kids. And so it'll go pretty quickly for him. But then I'm gonna come back with another scenario to piggyback on what we talked about with somebody who does have kids and how we can qualify if she can carry them or not. Okay.
all right.
All right. Well, I thank you all for showing up today and giving me your attention while I went through that. Like I said, this is kind of boring information, and this is probably the most boring part of it all. Was this first part? After that, it's gonna really just get into the actual tax information, the actual tax documents, and putting them onto it. Because the main thing is where you want to determine is when you sit down with that client and they're telling you, it's me, my wife, we've got these kids, are they able to carry those kids or not? Because that's going to drive the numbers that you're getting. versus, you know, whether they're getting a refund, if they're owing, if they're breaking even. Well, okay. Well, I'm gonna let you guys go. I thank you again. And you got everybody's got my number. If you need anything, just let me know. If you were on and you were able to see the video of the trips and you want to look at one, just let me know. I can go ahead and send you one now. And you can go ahead and just look through it. Like I say, when I send it to you, you have 7 days to sign up for it. If you don't sign up for it in those 7 days, it's no big deal. I can just send you another one when you're ready to actually sign up for it.
Okay.
Okay. All right, ladies, y'all have a great evening.
You too. Thank
Thank
you.
Send it to me?
Thank you.
Ms. Lynn, could you send that to me, the travel thing?
Uh-huh.
Okay, thank you.
Okay. Uh-huh.
All right.